Okay, and then just picking out some of those big end-use markets such as automotive and construction, what kind of state are they in at the moment in the regions?
Well, again, I think they're going to be in different states. So that if you look at the United States, for example, there hasn't been very much recovery in the main housing market as we've known it over the last 50 years, single-family construction. In fact, home ownership rates and so on in the States are declining now and have been for quite some years. What we have seen, however, is a bit of a recovery and a boom in the rental market. First of all, companies were going in and buying up foreclosed properties and renting them out, and now builders are actually building more multifamily apartments for rent. So that's welcome news. We're nowhere near where we were, but at least we're not on the bottom anymore. If we go to Asia, however, there's been a fantastic boom in house building, with the fantastic boom in speculative building. And the new government has clearly decided, if one reads what they've been saying in the last few months, that they've got to puncture this bubble. And so you've got house prices at the big cities 14 times earnings, which is double what they were in the States at the top of the subprime group. So there's really got to be a bursting of that bubble, and that will be painful, no doubt at all about that. Here in Europe, I'm afraid the construction market is not doing very well, and if you take PVC as a classic indicator of that, we've had the sad case of Chem 1, third largest PVC producer in Europe, going into administration, Curling, part of the Ineos group, closing one or two plants. Here we've got businesses with first-class management just finding conditions too difficult. And so that tells you, really, just how bad the situation is.
And automotive in Europe's pretty difficult as well, isn't it?
But automotive, indeed. I mean, the picture here of Germany, for example, which held European car sales up for the last 2 or 3 years, their sales were down 17% in March. That's a pretty big number. And sales across Europe have now been falling for 18 consecutive months. So that tells you. Equally, one can see in the States, we've seen more new cars being sold, but that was only because there's been some very attractive offers for people trading in old cars. And there weren't that many old cars sold, new cars sold 4 years ago, which are now old cars. So we had a slightly awkward market there. Again, if you look at China, the government is targeting car usage for pollution and other reasons. So we can't expect a lot going on. If we look at India, India suffered its first annual fall in car sales for 10 years. So things are mixed again, but generally, at best, sort of somewhat flat, but not going up in the way we would hope.
And then just looking at oil prices, they've come off quite a bit recently. What's your outlook for the rest of the year?
I think that companies and business managers and financial people have to look at this very carefully indeed. Because if we look at the fundamentals of oil, we see that there has been no great growth in oil demand. We see that there has been no problem with obtaining product. Inventories are at either high or record levels in most regions, and supply is increasing dramatically in the States, in the North Sea, almost everywhere. And we've had oil prices at an all-time record high of $111, $112 for 2 years. Now, the poor consumer has to heat their home, they have to fuel their car, and they haven't got any money left to spend. That's why the economies are in such bad shape. So oil prices, in my mind, no doubt about it, will go back to their historical levels, which have been in the $10 to $30 range. And people may say, oh, but that's impossible. Well, from 1900 until the central bank started playing around in this area, that's where they always were. There were only 4 exceptions from 1900 onwards, which were during the Iran crisis from 1979 to 1983. So that's where they've normally been. Natural gas prices, in relation to them, the oil price is normally 10 times that. Again, natural gas is telling you we need to be about $30. And the problem has been that when the central banks started coming in and doing these liquidity programs, they panicked the pension funds. And the pension funds said, they're trying to devalue the dollar. What does that do to our investments? We must find a store of value. Oh, oil. Let's buy oil as a store of value. People always use oil, and it's priced in dollars. So it will go up. And they charged in. And they overwhelmed supply and demand fundamentals. So the IMF has said recently, 25% of some pension fund assets has been put into investments like this. But of course, what goes around comes around. in the last few weeks, Japan has got fed up with seeing the value of the yen go from 100 down to 77. That's killing their export business, and so they have announced their own major easing program. And the yen has gone from 77 back to almost 100 again. So now a pension fund can say, oh, we don't need to worry now about devaluing the dollar, so now we can move out. And we've seen already a $20 fall in the price of crude oil. Now, one hopes that we will not see a sudden collapse, because the result of a sudden collapse would be incredibly difficult for the chemical industry to handle. If you just think about the fact that we have 45 to 60 days of product tied up in our systems, and if that was suddenly devalued by half, say, or by 3/4, what on earth would we do? So, but we have no control over this. This is the panicky thing. So we may only think it's a 10% chance, but if those pension funds go out as quickly as they seem to have been doing in some cases, then, and some physical players say, oh, the price has gone down $20 or $30, I better sell, well, we know selling into a falling market is not good. So companies really need now to sit down and say, what would we do if this happened? We don't want it to happen. It's not our base case that it will happen. But if there's a 10% chance of something as difficult as this happening, the Boy Scout motto is the right one: be prepared. That's what I fear.
Thank you very much, Paul.
Thank you, Will.